Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Reed Goossens. Thanks for being on the show, Reed.
G'day, Whitney. Thank you for having me. Much looking forward to our conversation. I've seen you've been massively all over social media, so pumped.
Yeah, I appreciate that. I'm honored to have you on the show. I know we've talked numerous times and for a few years now, and I'm honored to have you on and looking forward to this conversation as well. But a little about Reed before we get started. In 2012, he quit his job in Australia and moved halfway across the globe to the U.S. to change his life and to chase his dream. With limited funds, no investing experience, and no credit, Reed went from purchasing a small duplex to growing his own real estate investing firm, Wildhorn Capital. Now syndicates large multifamily $1 million deals across the U.S. and hosts a successful podcast called Investing in the U.S. So, Reed, I'm looking forward to this story. I know the listeners are going to be able to relate to this because they probably feel like they're stuck at the moment, or this seems like too big of a thing to tackle, or this whole syndication business. There's so many moving parts. Well, can I really make this real estate investing thing happen? And so I love bringing stories on like yours. It's like, wait a minute, my position's not as bad as yours was, and you have made it happen. And I know it's come with a lot of hard work and many hours, no doubt about it. And so, but get us started and let the listeners know a little more about you, but let's dive into, how you made this happen and give us back us up a little bit to,
Sure.
We want to hear some of these difficulties so we can relate.
Yeah, well, back it all the way up. So thank you for the introduction. Excuse me. It's very flattering, but yeah, so my story is I graduated from University of Queensland in Australia, 2007. My background is in structural engineering. That's what I do. That's what I did. I went abroad to Europe, to London. I moved to London in 2008 and worked in the 2012 Olympic Games as a structural engineer. And then in 2009, I moved to the south of France and took a year off. And I was a deckhand for a Russian billionaire on a mega super yacht in the south of France. During that time, I met my now wife, then girlfriend, Erica, who's American. Fast forward a lot. I sailed across the Atlantic Ocean, had a great time, fell in love with the United States because I came backpacking through the United States back in 2009, and then moved back to Australia. Had this 2 years of being abroad, met this girl in my life. I wanted to move back to the United States at some point, but also wanted to take control of my life. And living in a cubicle, being an engineer, I loved studying it, but I didn't love doing it and being trapped and having 2 years living abroad. Really got me going of like, okay, well, how the hell do I pay myself to live my life and to travel? And that's when I picked up the book, Rich Dad, Poor Dad. And that was a whole mindset change of, okay, this is all about, getting passive income through real estate or through stock investing or through business investing. And I happened just to choose real estate because my dad he's a high school teacher and he'd been investing a little bit in real estate. And the fact that I was a structural engineer, probably rubbing shoulders with developers, it sort of took the blinkers off a little bit and I started to say, okay, I need to take this a little bit more seriously. Fast forward a little bit, my Erica, my girlfriend, moved to Australia for a year to do a master's degree in 2011. And then in 2012, I'd been self-educating in REIAs or the equivalent of REIA investment groups in Australia. I was going to do a flip or a lease option or something. Still working full time, but then I was like, you know what? I really want to live in New York City. And Erica had finished her degree. She's American, obviously. And we just said, screw it, let's go. I quit my job in early 2012. And then when I turned 26 in March, my birthday's on March 24th. And when I turned 26, back in 2012, and you can do the math to determine how old I am now, we moved to New York City, and I didn't have a job. I literally pounded the pavement until I found one. And what I did differently was that I knew that putting my resume on Indeed.com or whatever it was, I wasn't educated in the United States. So saying no to someone like me with a structural engineering degree that wasn't from America was very easy. So I had to make myself different. And I went out there and just door knocked and literally had an A4 piece of paper with all the engineering joints or firms in New York City that I thought were less than 30 people, because less than 30 people means they don't have HR and they don't have gatekeepers. And so within, I think, 2 months of being here, I got my job, got the visa, got an apartment. So that was check. And then, a couple of months later, I was starting to attend my first real estate investment club in the New York area. And I had to change my entire mind shift about how to investing lingo here in the United States. And I had to understand what cap rates were, and the fact that America has the lowest barriers to entry of any, compared to where I come from. I bought my first property within 6 months of being fresh off the boat for less than $40,000. It was a triplex in upstate New York and Syracuse. Now, it was Section 8 housing. It was in, a Class D neighborhood, but I got started. And my whole journey about, taking the leap of faith, moving here, burning the boats and moving to the country where, I wanted to give it a go, give it a crack. I did it. And then I realized, oh my gosh, the barriers to entry are really small. And what Kiyosaki says about getting passive income, well, I can get started with my own cash. And that's how I did get started. And then over the years, since then, I've flipped houses. I've done, bought little portfolios of single family houses. And it wasn't till 2 years ago that I actually achieved financial freedom. And that was by and large to do with my green card. I had to get married first, obviously. But then I got to a point where I'd done enough deals on the side and I could quit the corporate world and go out on my own. So bit of a long-winded introduction, but that's kind of how I got started.
Wow. I just like the listeners to hear that story, though, and think about how you came here. I mean, everything would have seemed like it's against you, right? I mean, coming to the U.S., you mentioned that it is so easy for employers to say no, but that didn't stop you, and that you went out door knocking and you even had a method or strategy to that, to right. Specific people. And that's so impressive. But then, within 6 months, you owned real estate. You own some rental property. And so walk us from then to, moving into the syndication business or, commercial real estate, and why.
Yeah. So good segue. 2013, end of 2013, I had 3 little properties in upstate New York, and I was about to start a flip in Philadelphia. And my buddy came down from Canada, a very good friend of mine who I had studied. He's Canadian, but I studied civil engineering, structural engineering with him in University of Queensland back in the day. And I was, sitting there having a beer with him. I'm boasting, oh man, I've got these, 7 units or something, something very small, and I'm doing this thing and it's great. And he's like, man, that's so cool. Good on you. And then he just blurts out, oh, I just closed on a 70 unit deal. And I said, 70, like 70, 1, 2, 3, 4, all the way 69, 70. And he's like, yeah, 70. And I was like, how the hell did you do that? And he went in to tell me about, other people's money, syndication, raising from friends and family, and using sell-about carry financing to go to find a value-add deal, talking about, obviously, things that I knew about, and increasing NOI, doing the same strategy I was doing on my small little duplexes and triplexes, but applying it to commercial real estate where you're shifting the NOI and thus shifting the value of the property and increasing the cash flow. And that just blew my mind. And he just really inspired me to, okay, well, I was like, well, what was the first step? He's like, oh, a friend of a family he became a mentor of mine. And I said, boom, that's what I need to go do. I need to go find a mentor. In early 2014, found a mentor and said, and I knew at that point that I'd done a few little deals in upstate New York and was going to flip a house, but I was still working full time, coming to the end of my tether in terms of what the banks were going to lend to me. And I had a portfolio maybe of $200,000. Like, it wasn't much. It wasn't, not that that's to sneeze at, but it wasn't going to supplement my W-2. So I knew I needed to, level it up, and I've been putting off getting a coach for years. I've been pitched all the coaching stuff, and I found someone who aligned with my interests and was a young guy out there hustling, doing the same thing that I wanted to do. And I got him on board, and then we sort of co-invested a few deals together. And over a period of about 2 or 3 years, I started to do my own deals. And in that time, I made a shift from structural engineering into becoming working for a real estate developer. And I spent 3.5 years with a real estate developer working as a owner's rep, building 400 or 500 luxury units in Long Beach, California. So all of that was just like, I knew that, and for the lesson for those people out there about that is that if I had to keep working at a W-2, I needed to find a skill set, which I had, which was structural engineering, that I could apply and be paid, hence nicely, to continue to learn real estate investing, the business of ground up construction. And that's where I went and jumped ship into the owner's side and worked for a developer for 3.5 years, plus doing my own deals on the side. And that slowly got the momentum going. Launched a podcast back in 2014 as well. So a lot of things happened over a period of 3 or 4 years, a lot of work, but the lesson is that it was an evolution. It was all sort of putting one foot in front of the other, talking to folks, surrounding myself with people who knew what they were doing, and just keep grinding. And that's how I eventually have got to 1,700 units now, and looking to buy more in 2020.
Yeah. So, and you talked about, you had that one duplex in 2012, but in 2013, you said you had 3 properties already then. I mean, that's so impressive, just moving here and making that happen. But then you had this friend, and I think that happens to a lot of us at some point. Like, we feel like we're doing pretty good, but then it's like, just in casual conversation, this guy talks about what he's doing, and it's like that many times more than what we've done. But It's awesome that it opened your eyes to even finding a mentor.
Yeah.
How did you, I know you mentioned that this person was doing what you wanted to do. They were ahead of you. They were motivated out there doing it. Any other, quick guidelines or quick suggestions you could give to the listener that, is looking for that mentor?
Look, Whitney, I'm very frugal with my money. And back in 2013, I didn't have a ton of it. Moving halfway across the world is expensive. It, uprooting your life, blah, blah, blah. And I didn't come from money. I saved it all myself. So, I've been pitched these deals, $20,000 mentorships, $30,000 mentorships. And I was like, no way. I needed that one-on-one person who I could get direct access to. And I needed someone who was kind of I felt that I resonated to, maybe a little bit older than me. This particular person that I joined, he'd only done one deal, but it was enough to prove the concept and that I could use his credibility to build my own credibility. And that was all it took. And it really, I knew I had it within me. It was, I guess, parting ways with that check to pay the mentor in order to say, okay, I can give myself permission to that. I'm worth to go and achieve what I want to achieve, if that makes sense. So find someone who you resonate with, because that's the most important thing. And look, he was a mentor for a period of my time and my growth. I've now different mentors today. So you don't have to keep with them forever. It's probably like a 2-year, 3-year sort of thing. And then you go on to someone else. So
yeah. So, 3 properties to 1,700 units. I mean, it's very impressive. So, get us to the syndication, to the larger deals that you're doing now, and, going from the smaller deals, which is, like you said, it's no small thing. It's awesome. If that's your thing you're focusing on, but, you moved from that to the commercial business, and get us to that, getting to that first large deal is difficult.
Yeah, so back to the mentor, made a move in early 2014 back to Los Angeles from LA, from New York, should say, and at that point just started doing stuff to try and build my investor database, and that was hosting meetup events. And through that meetup event, I met a gentleman who was still working full time, but was an analyst and was looking at deals. And anyway, and I had my mentor, and I sort of introduced the two of those guys, and I took a piece of this deal that they went and took down in Houston, and I raised a bit of money on the deal, and I helped with the underwriting and the due diligence. So it was sort of like we just figured it out. This first deal, it was this particular gentleman's, Frank's, first deal, and it was my kind of first deal. And my mentor was involved as well, but helping with the money side of it and the financing. And so it was just figuring it out, rolling up the sleeves, and that was in early, I think, mid 2014. And then from there, those two went off and created a very successful partnership. And at that point, I pivoted to the ground up development space and wanted to be an owner's rep. And I was still supporting them as much as I could. But from there, build up a little bit of track record with some of their deals they were doing. And then in middle of 2015, started underwriting my own deals, started getting my systems under. I knew that if I was still working full time, I couldn't underwrite the deals that were coming through. So I went and hired some analysts from USC, and they were underwriting 3 or 4 deals a week, undergrads. So I could see these deals, and I was making offers. But one thing I was missing was the boots on the ground. I was this Australian guy calling from LA, these Dallas brokers and these Austin brokers and these San Antonio brokers, and like, who the hell is this Australian guy calling me? And I was getting really close. I was getting offered to best and final and all those sort of. So clearly my systems were working, my underwriting was working, but the boots on the ground piece, the relationship piece wasn't working. I was losing out. I remember a 109 unit deal in Dallas that I lost out by like $30,000 or $40,000, and it was literally because I just didn't have that same relationship. So hence, But I needed someone on the ground, and that's where I met my business partner, Andrew Campbell. And he lives in Austin, and he was able to sort of go shake the trees, the lemon trees, I so to say. And I determined if we make lemonade or lemon juice out of those fruits. So really that was the impetus to get the systems, doing it on my own, get the system set up, understand where my bottlenecks were, which was underwriting the deals and just being, having to still work full time. It was just part of like, okay, got to get out of your own way. Spending a bit of money on quote unquote, employees, even though they weren't, they were just, little guys from USC, getting an hourly rate, and then finding a business partner who had complementary skill sets to me in order to go and scale this business and do our first major deal on our own. So, very systematic in the way I approach it. A lot of hard work in there that, for your listeners listening out there, it's not just 1, 2, 3 equals 4. It was, 1, 2, 6 back to -2. It was a lot of work. So yeah.
Could you just give us a couple points on you found Andrew and you talked about you all having complementary skills. How did you know that, okay, this guy is going to be a fantastic partner? Obviously, you all have done so well. It's been great, even myself, to see your all's growth and success and just the brand and company, that you all have built. But what was that in him that you seen?
Yeah, so I had been involved in other partnerships before, obviously with my business partner, with my mentor and his new business partner, Frank. Saw how those two, got on. I'd flipped a couple of houses in Philadelphia prior to even moving and getting involved in syndication, and they didn't work out very well. And I understood, looking back at what were the lessons learned. So it was sort of not necessarily, it was a failure and a flip, and then seeing a successful partnership from the fly on the wall with Frank and my mentor's new business partner, seeing them, have a synergy and then seeing what I didn't want from the flipping point of view when I, did a few flips in Philly back in 2013. So really understand, this wasn't my first rodeo in terms of assessing someone in their ability to help me grow and help me achieve my dreams, as much as I'm helping Andrew, achieve his dreams. And so it really is about, okay, well, I'm the numbers guy. I love my systems. I'm detailed orientated. But I was also at arm's length. I was in Los Angeles. I live in Los Angeles. So those sort of things are actually good, where you can have someone else who's like, okay, I'm going to be boots on the ground. I'm going to go schmooze brokers. I'm going to go see again, but that analogy of shaking the tree and seeing what fruit falls off. And then he's throwing me the fruit to see if we can make anything out of it. And me not being in the market and me being a little bit of an arm's length away makes it better, because when I do fly in, it's like, oh, Reed's in town, everyone's on their best behavior. So it's like little things like that. But back to the partnership side of it is just, it doesn't, I don't know, it's a 6th sense, a 7th sense, whatever it is. It becomes ingrained in you after you see a lot of folks be successful and how they've been successful. If you're too alike in the business partner approach, syndication is a team sport. You can't do it all on your own. If you've got two business founders who do very similar skill sets and you're missing some players on the bench that you need, that's not going to be as maybe successful as two complementary, so sort of yin and the yang. To make sure you're going out and covering all the bench spots that you need in order to go and become close on your first multifamily deal. So yeah.
One thing that has made me successful is something that most people don't think of. It's the way that I've branded myself online. If you want to brand yourself to raise more capital, then I suggest working with my friend Adam Adams. So go ahead, scroll down, and find the link in the show notes. So I think it's a good place for if you could elaborate a little bit on and it doesn't have to be you and Andrew specifically, because I know just like myself, lots of operators in this space, but some skills that were helpful that you had versus Andrew, and like you're talking about, if you had the same skills, well, that's not as helpful, obviously, as if you both have different skill sets. And what has that been, kind of across the industry for numerous operators, or specifically for you and Andrew, that you've seen? Okay, it's great that I have this and he has that.
Yeah. So for me personally, I've been involved since I graduated in 2007 on the commercial W2 front, probably $500 million worth of ground up construction across different, infrastructure. I've done some multifamily, done some retail, all as either a structural engineer or an owner's rep. So I came from the construction world, and I see sort of two types of folks, or maybe even three. You've got the guys who come through, the tools, I call it, and that's really where I came from. And you've got the guys who come through maybe law or Wall Street or, marketing or something a little bit different. And there's two sides of the coin. And I definitely came from that, the tools, the boots on the ground, the getting in the mud and getting dirty and understanding how to build stuff and how to understand, construction management and running schedules and running crews and all that sort of stuff, because that was what a structural engineer does. And that's what an owner's rep does. And so having a decade of that worth of experience is very valuable. And that a lot of people, maybe not necessarily have that. So I not that I had a leg up, but I definitely had an insight into how the big boys do it, how the institutional folks do it. And all these institutional folks that I'm rubbing shoulders with don't have podcasts, don't have books. They're just out being sharks and just doing what they're doing, right? So I came from that world. Andrew came from a marketing world, relationships, more salesy, salesmanship stuff. So you can just in those two skill sets, you can see it's balancing each other out. And when you look at your own partnership, for those listeners listening to the show, look at what the traits are. And we fell naturally into, our roles and responsibilities, but we had, after we did our first deal together, it automatically just trickled down into Reed does this and Andrew does that. But we had to define it so we could make sure that we there was a clear delineation of who does what. Because also the other thing, you don't want two people doing the same thing. So building your systems up again to understand, okay, well, Andrew does this and I'm going to do this, and make sure that, if I've got this side of the business, tied up, and I know he's got the other side of the business tied up. So yeah.
So what are a couple, key systems that you would say were crucial to going from, just those few properties in 2013 to 1,700 units now?
The clear realization that I'm sure a lot of the folks listening to this podcast maybe have a W-2. You need to understand what your shortfall is. And my shortfall wasn't necessarily underwriting or understanding how to run a spreadsheet or math. It was just getting out of my own way and knowing that I had to spend some money to free up time to do other things in my business. So I go back to the 2015 analogy where I was like, this is crazy. I'm working 60, 70-hour weeks in a day job and I need deals to be underwritten, but I don't have the time myself to do it. Well, then go and spend $20 an hour on on a person who can underwrite 4 deals a week. And if you teach them how you want to underwrite, how you want the deals to be underwritten, then they can just go off and do it. And you can just email them. And, we had Slack channels and we had all these sort of systems built up. That was the most liberating thing I've ever done. I also remember when I started my podcast and I was like editing the first couple of shows on GarageBand, and my wife's like, go into Upwork and hire someone to do this because you do not need to be doing it. It's those less than $50 an hour tasks that even if you're working full time, go off and hire them so you can let the business grow organically. And even if, time is money, I know people have families and, you've got to keep the roof over their heads and, they've got to have this day job and they've got to then also want a side hustle. Maybe there's some stuff from the home that you can, I don't love making the bed. I don't love ironing my shirt. So I get that done somewhere else, right? Taking that off my plate, and it costs me less than $10 an hour. So little things like that to start systemizing your everyday in the home, but also understanding what your systems can be established on the front end in your business in order to free up your time to focus on what I like to call black time, which is, the stuff that moves the needle. I got black time, blue time, red time, and I need to spend most of my time in the black or a little bit of the blue, but none in the red. And some of those admin red stuff is, you got to just define what that task is and go and see if you can outsource it. So yeah.
Such good advice. I couldn't agree more. And I can relate to that so well. When I first started hiring assistants, it's like, okay, now we can move so much faster. So yeah, it's a learning curve, right? But eventually, you are going to get there faster than doing it all yourself. So Reed, what's been the hardest part of this syndication journey for you?
What's been the hardest part? I think the hardest part that I see in myself as well, as much as I see in other people who come to me and say, Reed, I want it to happen. Like I remember when I first moved to the United States and I was like, I want to have, and I remember there was some not dark times, but just times where in 2013, 14, 15, like there's 3 years there before I really got my first deal going. You question yourself, am I doing the right thing? I'm going to have this podcast going and I'm, what little wins can make me feel better, but I hadn't actually got the first syndication done. And I think you got to focus a lot on that. This takes time, and there's some folks out there who can achieve financial freedom within 12 months, but the reality is it's going to take 5 to 7 years max. Minimum. And if you don't have that mindset on the front end, you're going to constantly, you either one will give up, or two, you won't continue to grind. Now, I understand you've got to balance the work. Not everyone can just quit their job and start focusing on this full time. But whatever journey you're running it yourself, and don't compare it to anyone else. So it's the mindset on the front end. Don't compare to anyone else. And it's okay that it takes time. Anything that's worth doing and building does take time, and you've got to allow yourself the freedom and just mental headspace to be like, yeah, this is going to take 5 years. And if you have that on the front end, rather than like, I'm going to be financially free in 2 years, and you get to the end of 2 years and you don't achieve financial freedom, do you think the likelihood of you quitting is going to be a lot higher than if you had the 5-year mindset on the front end? So yeah, that was probably my biggest struggle throughout this entire journey.
Anything quickly that you could tell us that helped you to overcome that?
Oh, look, everyone's different, right? And I have my own, I've got my own mental capacity, and other people have got their own mental capacity. It's obviously mentorships are really important. Having a coach so you can sounding board. Am I doing the right thing? Am I moving the needle? Perspective from someone else who's not your wife or your husband or your best mate. Because sometimes that's a little bit too close. Having that third party who can look in and see that no, you are moving the needle. Keep going. That's really important. Understanding in recent years, work on meditation. Understanding my own person as myself, that I need physical exercise every day, like taking care of me and myself first and foremost, to then allow the business or the subconscious to come up with ideas of new cool things that I can go and do and relieve myself of pressures within the business. It's an ongoing, no one ever has it right, but you got to start somewhere, and that's through journaling, through daily to-do lists, through setting 3 goals for the week and just achieving those 3 goals. It's little steps, and then when you look back over a period of a year, thinking how much you have you have achieved, in order to give yourself that bit of gratitude and mental calm, as I like to say. So yeah.
So how are you preparing for this potential downturn that everyone's talking about?
We're actually doubling down in higher growth markets, markets like Austin, Texas, where supply and demand are still at a really good peak. And it's what I mean by that is, I live in New York. I used to live in New York City. I come from a country where cap rates are really, really low. Build new product is hard to build in Los Angeles. It's hard to build in San Francisco. It's hard to build in New York City. Austin is very similar now, that the barriers to entry for new product into the market are becoming high. Planning approval takes 2 years. Price of square foot of dirt in downtown corridors in these sort of cities are trading just as much as what it's here in downtown Los Angeles. So when you have high barriers to entry in those markets, it means the demand is really, really high. And so when you have a really, really high demand, you want to then make sure that you can try and pick off some of the existing product that is in that market, because job growth is really, really important to me. You might have less cash flow in the first 3 to 5 years, but over the long 10-year horizon is that it will be a very good investment. I also think that the last 10 years that we've had since the recession is going to be completely different to this next decade. And a lot of investors need to readjust their expectations. There's every man and their dog is involved in multifamily syndication, it seems like now. It's understanding what's your value and how you go and create that value, thinking about deals differently. You also need the equity to go and think about those deals differently, right? So your investors who expected 19 and 19 and 18% IRRs, well, we're not in that market anymore, and you need to readjust it. And a 12 to 14% risk-adjusted return is still a really bloody good return. I come from a country where if you double your money every 10 years, you're doing really well. So, people are, I don't want to double my money in 3 years. We're not in that economy anymore. We're not in that market. So adjusting that expectation of investors, explaining to them why this is a lower risk deal for capital preservation, rather than going out and be a little bit more speculative on a tertiary market or a secondary market that may not have the stability or the job growth when a recession does come. So yeah,
I wish we had more time to jump into that right there. Are you all changing your hold periods as well?
Yeah, more 7 to 10 years. We just did a deal with one investor out of the Bay Area. He wants his IRR over 10 years wanted to be a 10. Right, every deal pencils at a 10 over 10 years. So he wants to double his money in 10 years. That's exact. But he is a wealthy individual, and he's now all about capital preservation, about tax savings. So finding more of him, rather than necessarily the retail investor who may not be as sophisticated as this gentleman. So it's changing up equity. The deals can still be done. It's just the equity expectation needs to change. And if you have that, if you know that there's equity out there for lower return deals, it's not a bad deal. And that's what people seem to think. Oh, well, this is not giving me, it's not doubling my money in 5 years. This is a excuse my language, deal. That's not the case. It's if you got to understand what's under the hood and understand why is it a lower return. Well, because the risk is low, because their supply is higher. Demand is higher than what the supply can give, and so there's a lot of competition in the market for those types of the products. So reducing the return. So understanding the nuances behind all of that is really important as we move into this next decade, the hustling 20s, as they like to say.
Yeah, I like how you talk about that. Just changing that mindset around the equity, and I feel like you're either going to change ahead of it, or you may be made to change later.
Correct, 100%. So yeah.
So what's a way that you all have recently improved your business that we could apply to ours?
Oh, simple thing is change. We were the first one in the syndication world to roll out the AB structure on equity. So where you have 25% of the equity is, and this comes from really ground up construction. In ground up, you have your debt, you have like a mezz equity piece, which is someone who would sit with maybe an 8% preferred, but none of the back end. They might even have a second tier in there, and then the GP. It's the same adage is applied into syndication, except you have the debt and then you have a Class A investor who gets a 10% pref, but none of the back end. And then you have a Class B investor who gets an accruing pref, but they get 70% of the back end. So that in itself allows us to split up our investor pool and see who are the folks who want to sit in that Class B position, and let's go make better relationships with those people because they know it's about the long-term horizon, right? It's not about you give me $100,000 today and that's $7,000 a year. Is that really changing your way of living? Or is it you give me $100,000 today and I double it in 7 years' time, or 2.5 in 7 years' time? Is that what's really more important to you in your retirement account or whatever that might be? So splitting it up, and we have to respond to the market. So we still have some investors who want that really safe position of that 10% pref. But we also now have a massive pool of investors who we could see just by doing the couple of deals we have done that they just appreciate long-term hold. So we can go and approach them and say, I've got this different type of deal. Cash flow is going to be a little bit lean out of the gate for the first 2 or 3 years, but it's going to have it's got this new development play on the front end. We're trying to acquire 3 other properties around it to be on this particular expressway in order to build up and higher density and all that sort of stuff. That is how we come and create value these days, rather than just putting lipstick on a pig. So trying to define where we're going and how we're shifting and how we add the value is really important, and how we offer different structures to our investors in order to achieve that goal. So
we should do a whole show on that sometime. And that's awesome too. I love that model that you all put out. And I knew when I seen your all's opportunity like that, I knew it's the first time I'd ever seen it.
Yep.
Now
awesome. Everyone seems to be doing it.
Right. I've seen more now. Yes.
Yeah.
So what's your best advice for caring for investors so they want to come back to the next deal?
Oh, look, I think transparency is the biggest thing. Transparency, 100%. If things are going to go wrong, the last 10 years has been the golden era of commercial real estate, where you could literally do anything and you made money, right? This next 10 years, you're going to sort the oats from the chaff, and you're going to see who's worth their salt, and you're going to have to understand that there's going to be communication issues with, things are going to come up. I always think of buying existing deals like buying an old car. A head gasket might blow, and it might cost you more money. There might not be that cash flow for that first little bit of time. But as long as you're being transparent and consistent communication with your investors over time, they will know that you've got their best interest at heart and you're doing everything you can when something does come up. And let's not be wrong, as deals get thinner, cash flow gets thinner, operational budgets get thinner. You need to understand, where the skeletons are in the closet, and making sure that treating your investors with respect and dignity, that they are your partners, and they need to be abreast of the decisions you're making and why you're making those decisions. If something pops up, then they're only just going to be more forgiving. It's like, yeah, look, I get it. You're doing the right thing by the deal. You're doing the right thing by us. I appreciate you for the communication, and let's keep chugging forward. So, yeah.
What's the number one thing that's contributed to your success?
Number one thing that has contributed to my success. I think the number one thing for me is still fear of regret. Taking that first step and moving halfway across the world was that I just feared that if I didn't give this a crack right now, and the worst case scenario when I first got on that plane was, well, if it doesn't work out, I'll move back to Australia and get my engineering job again, and my family and friends are here. Like that was it. Understanding what the risk, understanding what the downside is. And if you're okay with that downside and that allows the mental clarity to go and take that next step, because you don't want to have the fear of regret when you wake up when you're 70 and go, God, I wish I'd done that. Or God, I wish I had given that a crack. That is what has been probably the most driving, motivating factor for me today, and will continue to be for me in the next, rest of my life. I'm in my early 30s, and I picked up the book Rich Dad Poor Dad in late 2009, and we're now sitting here literally a decade later. A lot of things can happen in a decade. It's about hustling. It's about making sure the mindset is correct on the front end, rolling up the sleeves, not afraid to get dirty, and always continue to learn. Like, I'm not sitting here that I'm some sort of guru or not. I pretend that I know everything. I don't, and I'll always continue to learn. I think that's that humility and keeping your feet placed firmly on the ground, and you don't get your head in the sky, is really important to growing a real estate investment business and or any business. I might add. So yeah.
That's awesome. And Reed, and before we have to go, tell the listeners how you like to give back.
Yeah, well, look, I've got my own real estate investment podcast that I've been going for over 4.5 years now, and it's a weekly show, and I interview other folks like yourself, Whitney, and I can't wait to have you on my show. But just about their journeys, right? Being vulnerable with people and showing the dirty laundry about the journey. Like, everyone talks a lot about success, and success is not where you learn. It's about the struggles in terms of getting towards that success. And I've had some failures along the way. Now, failures, it's been small. And you've got to get it back on the horse and keep going. And that's totally what the show's about, and about the journey, because too many people get on shows and, it's great and it's easy and it's just, 1, 2, 3 and you're done. It's about being vulnerable and open to people so the listeners can understand the struggle that we've all gone through to achieve success, whatever that might look like.
Well, thank you so much, Reed, for your time and sharing your expertise and your amazing journey all the way from halfway around the world and coming with little to nothing, and how you made it happen ultimately. This your drive. I hope the listeners are just feeling that, from you, and like, okay, I can get out there and make it happen, and just by listening to you. But tell them how they can get in touch with you, but then also be sure to tell them about your books that they need to look up.
Yeah, so the easiest way to get in contact with me is jump over to reedgoossens.com. That's ReedGoossens. There's everything on there, the podcast. I've got 2 books in the background if you're looking on YouTube. Just hit #1 best-selling on Amazon for investing in the US. And I've also got the second book, 10,000 Miles to the American Dream. Get your hands on either of them. Both of them are pretty, in my humble opinion, are just really about the journey and the story and how I learnt the different ways of investing here in the United States. And yeah, if you're ever coming through LA and you want to meet up for a coffee or a beer or lunch, and you just want to talk shop, just you can email me at info@reedgoossens.com. I'm always, as long as you give me enough warning, I'm pretty flexible with meeting up with folks. So yeah.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.